heard from a couple of different kinds of speakers, a banker, political activist, futurist, a big corporate, and now we're going to talk to an investor. So Marcos Battisti of Intel Capital, come on up and join us. We'll sit underneath the bowl here.
Thanks. I'm not sure this is working.
Are we live?
We live? Yeah. Okay.
Yeah,
Thank
I can
you.
hear you.
So,
It's nice to finally have you joining us. I know I've been chasing your people for a couple of years.
Yeah.
And so yeah, welcome to Pathways to Exit. We had
Thank
a
you.
chance to talk a little bit about what we're all about. So I thought I'd ask the same question to both being outsiders in Europe. We kind of see things a little differently.
Yeah.
Sometimes it's good, outsider view. So tell us a little bit about your pathway here to Europe, your
my
background.
personal
and
pathway.
Your pathway to, yes, yeah, well,
Okay, sure.
I know you have some interesting stories
Yeah,
there.
guys, I could stay like 4 hours
So
here.
take it away.
Okay, well, so I was born in Brazil. My family, part of my family is Italian, so obviously there was already a link to Europe anyway. And I come from a military family as well, so we moved to the US when I was quite young. My father's a military attaché over there. I eventually came back to Brazil. I myself joined the military. I went to the military, the Naval Academy. I was in the Marine Corps in my country, and after about 5 years, I resigned my commission because I got fed up, moved into engineering, banking, came to France to study at INSEAD, and I was actually going to be transferred over to the US where I had, because I was in banking, I was going to go back into it. But then I met my wife, stayed in Europe, and at that same time I got approached by Intel, who was setting up the group, which is the current group that I work for, obviously Intel Capital in EMEA. And I thought it was an interesting proposition, so I decided to stay. And now I manage the region, basically, right? So, which is an interesting region for us, which is basically the biggest investment region we have outside the United States. And I think for the audience, to give a little bit of perspective, we invest from 300 to 700 million on average on a given year, dollars. In Europe, this year, we are probably going to be placing around 150 million. Last year, we invested 3.3 billion dollars, actually. So sometimes we go above the average, as you can see, above the range. All in all, we've invested since inception, which is about 25 years ago, about $13.5 billion, $14 billion. And in EMEA, that figure is about 1.7 billion, mostly in Western Europe and Israel.
Right, so let's talk about that for a second.
Sure.
Western Europe, Israel, it's not a small region,
No.
and there's a lot of diversity there.
Yeah.
So, quick overview. We like to tell stories, hear stories, so...
Yeah, well, diversity is okay, right? So if you look at my background, I lived in 7 different countries when I was growing up, and I come from a family that, obviously born in Brazil, but my dad is Italian, my mom French descendant as well, so it was a mess basically, right? So that's okay, it's easier for me to understand, I think, a little bit the ecosystem. And one has to reach out and understand the culture to really be able to do business here. Or else, if you think you're going to be with a U.S., California mentality, come in and do business in Spain or in Italy without meeting eye to eye, having a coffee with the people, forget it. It won't happen, right? Doesn't matter what you're trying to do. You're never going to be part of the club. I think for us, the core asset we're looking for is innovation. And obviously, we're looking to make money on innovation. It's not innovation for the sake of innovation. Otherwise, we'd be falling to that traditional corporate investor who really only cares about making certain business units happy. Yeah, I want to make the business units happy, but I'm not measured by that. I couldn't care less if, in the end of the day, if they're not happy. What matters for me is I want to help that company grow and be successful. That's how I get remunerated even, right? And the only way to do that is if you find innovative teams and you help them grow. And there are very few things we can help, right? And that's a fact for any investor. One is money. And you know what? We're the biggest guys out there, right? We're bigger than everybody else. So that is not a problem on our side. Another one is you have to get experienced people as part of your team to be able to help the discussions on the board, be the devil's advocate, if you will, right? And we have people who've been around the block, right? I think the guy with the least amount of experience in my team has over 10 years in venture capital activity. So and has been on two other funds and with us for 6 years. So we put people who can actually understand the realities of the day-to-day of a company and help them grow. The third one is, in my opinion, the most important one, which is you have to have the right contacts. Right. In the end of the day, this is all about networking. It's all about, hey, you need help in selling to company A, B, and C. I'm going to call somebody who's a decision maker. That person will eventually take a meeting with you. It's up to you to make the sale, up to you to make the partnership. But we are going to open the door for you, if you will. Right. And the fourth one is we actually, I'm going to say something that a lot of people don't say, but we actually fire CEOs when they're not performing. And I have no shame about it, right? If I have to fire somebody, I will. Because in the end of the day, it's better to fire one or two guys than have a total a company with 100 people fall on their crack and go bust. If you will.
So going back to geography for a second, Israel.
Yeah.
So very successful, very innovative, but they seem to leapfrog Europe a lot. Are they interested in engaging with the EMEA team, or they always seem to me that they just want to go to Silicon Valley? Yeah. That's the only place.
No, actually, I have an Israel team as well, right? So actually, I have a big part of my team is in Israel. But if we were 10 years ago to say no way, they wouldn't care about Europe. I think they're caring more and more. But Israel is a tricky geography. You have to be on the ground there, right? If you think you're going to do business from the U.S. or from here, and it's close enough, it doesn't work that way. You have to be there on the ground, you be part of the community, and that's it. And then you get access to deal flow, and you know who is who. And that's what matters over there, is knowing who is who, because then we get real access to the real good entrepreneurs. The fundamental point, though, is it's such a small country that they're open for business. Right. And I think they felt it was much easier for them to establish shop in the U.S., and it still is, but they're actually more and more open to doing business with non-U.S. related countries, if you will. So they could do it in Europe, in China, and so on and so forth. We have an interesting story. We invested in a company some years ago, about 3 years ago. We actually, Intel acquired that company eventually, which we invested a pre-revenue, and the first engagement they had was in China, and we actually brokered that engagement because we knew Chinese were doing so. This is about a gesture recognition company, so we knew there was a Chinese consumer electronics company that needed a solution. We actually made the introductions, and eventually they made the sale, and Intel acquired, right? So the fundamental point is those guys are open for business. They don't have the mentality, my country is big enough, I want to be the champion here. They always think, it doesn't matter, I have to go and I have to be an international player.
So can you share with us, within your geography, between Israel, UK, the countries that you're having the most success in?
You'll be shocked. France is a big success story for us. We've been there since the beginning, right? So 15 years, our returns in France have been quite high historically. Israel, we are one of the big guys over there. We are the big guy in Israel, and we work with, we've been working with the community over there. We get access to the right deals. We have been doing more and more in Sweden, right? And actually in the Nordic region, we're just about, actually tomorrow we're going to be signing, we signed a deal today, we're wiring the money tomorrow on a 15 million euro deal we're doing in Finland, which we're going to announce later on. And obviously the UK is an important geography, although the UK is much more competitive. And I think recently, the real core innovation that we are interested in, we are not seeing so often in the UK in reality. So if I were to say, look, if I had to select one Western European country, which one would it be? It would be France.
Spain? What?
Spain, we made only one investment here. Speech is actually a natural language processing company, which is a very hard technology to grasp in Sevilla. Intel acquired that company as well. And you guys may hear Intel acquiring companies. It's quite rare. We've invested in over 1,300 companies, right, in 25 years. And Intel has acquired maybe 10 to 12 of those in 13. So it's an exception. And obviously, we on the investment side, on the venture side, do not get involved with that. We actually even exclude it from the company when that happens because there's a conflict of interest. But we are open for business for Spain. And actually, we're open for business for EMEA, if you will.
Well, we've got 18 European countries here today. A lot of entrepreneurs in the room. You mentioned it a couple times, the biggest corporate VC. I know you've got some strong opinions about what that even means.
Yeah.
And frankly, does it mean anything to be a corporate VC?
Sometimes it does. I mean, you want me to say it, or I can say it. Look, I don't like the brand corporate VC because I see it following. I see people who add value and people who don't add value. We believe we are one of the few guys who adds value. And I don't care if you're an independent fund or not, very few add value. And add value is in those 4 areas, and that's it. Somebody telling me, I built the company, sorry, right? You invest in the company, you can replace managers, but your help is related to 3 or 4 things. But it's not even an original thought. It didn't come from me. It came from a partner from a fund in the US that I was very close to that actually guided me when I was beginning in this venture career. And I bought that, what he told me heads on, and I agree with it wholeheartedly. And I actually try to see, can I really help with those things? So unfortunately, most of the corporate VCs have the mindset that what they're trying to do is help some sort of internal business unit or business group. And that's really not what this is all about. This is about enabling companies to grow and eventually having good exits.
Mm-hmm. So for the entrepreneurs in the room, how do you like to engage? How did they engage with you?
Well, we're quite flexible. Cold calling rarely works, right? We actually do take cold calls and we answer people, but it rarely works. Normally, it's better to be some sort of conference that we meet and we see some interesting article about you guys or something like this. We actually are, we have quite a healthy deal flow. So we engage with a lot of people. The key for us is understand what is it that you are doing, right? Does that make a difference? And I just met a company here now. It's a segment that actually I do not invest in at all. That's a strong word. I would invest in a reactive way, but they would have to be substantially bigger. That's the type of deal I would only do when they are on my high side, meaning I would be putting 10 to 15, 10 to 20, 25, meaning they'll have to be much bigger than where they are today. They are almost pre-revenue. But I actually told her, I understood what he was doing. I think it's actually very interesting what he's doing. It's a Spanish company, and I basically offered to, if he can send me some material, I offered to broker some meetings for him and investors in the United States who actually I know are interested in that segment. What's in it for me? Nothing beyond the fact that I'm helping somebody in the ecosystem, and what comes around goes around, right? Some as simple as that. So if there is innovation in your company and you think there's some uniqueness element to it, and that matters to the segments we're investing in, we are open to talk to you, regardless of the stage you're in.
So we wanted to talk a little bit about global.
Yeah.
So Intel Capital, you have your groups in different parts of the world. Do you get together and say, I'm going to kick your ass next year, we're going to do so many more deals, or how does that work?
We are all performance managed. Right, it's 100% based on returns. We basically, I wouldn't call it an up or out type of policy, but we do fire regularly up to 10% of the staff. That's what we did last year, for instance. We simply fired 10% of the staff. We do replace those guys. And it is a long-term measurement, so it's not something done ad hoc. Right? How do we work? Yes, it's true. We are international. That actually adds a lot of value because the fact is, as I mentioned before, it's not very easy to introduce a pre-revenue Israeli software company to a big Chinese consumer electronics company, right? Selling the internal market, and we can do that, right? But the way we do it is quite simple. We have only one investment committee. It's a central investment committee that looks at everything. There are 13 members of that investment committee. Only 3 actually have votes on each deal, depending on the deal, depending on the geography of the sector. The investment committee consists of the MD, so I'm one of the investment committee members, and the president of Intel Capital, which means when we invest in, there are 2 theses of investment. One is you're looking for a regional champion in high growth countries that would probably be more linked to emerging markets, where you're looking for a local champion. Or you're looking at a company that would have an appeal to the world, basically, right? So we then make sure that we're consistent on that approach. So if we see, is there really a likelihood that this company is going to have double-digit growth in this geography in the country itself? Is not investing, let's call it an infrastructure company. Is not investing in infrastructure. The country itself has stalled. Probably not, so we wouldn't do it. On a worldwide basis, what we do is, if you're looking at the state-of-the-art type of technology, what we do is we compare. And we do due diligence not only regionally but worldwide. So the company in Spain, the natural language processing, we actually looked at 43 companies worldwide that were doing some sort of natural language processing solution, most of which was noise. The top 5 companies, I'm glad to say top 4 were actually, out of the top 5, 4 were European, 1 was Canadian, and the Spanish one, for us, made more sense because the areas that they were stronger at were the areas we took a view that were the ones that would make a difference going forward, right? And by the way, what is natural language processing is allowing a speech solution to understand what you're actually really saying, right? So you say to a solution, hey, what's the average speed of a Jag? It will know that, it will probably ask you, are you talking about the car, are you talking about the animal, are you talking about something like that? So that's what it is. It's a core component of a personal assistant, a digital personal assistant going forward. So that company was the one we thought was the best. They started working with Intel. But that's not a link to our investment thesis, but they started working with Intel, and the guys in the business unit were so impressed that basically scrapped their own internal product and acquired the company. Right, so you know, it's not about having a crystal ball and trying to come up with, hey, I think this is it because I have a gut feeling. It's about understanding the segments you're investing in and putting in and doing the right due diligence, and that's what we do. Right, and if we don't see that happen, then yeah, we kick ass and we get people out of the way.
Right. Okay. So on that note, again, a lot of entrepreneurs in the room.
Sure.
Is there anything that just gets under your skin? Any tough love? Something you just really want to say to maybe not everyone here, but in general?
Well, again,
this is the good part.
No, let me just say, look, I've been in this geography for quite a while now. I strongly believe there's a lot of innovation coming out of Europe as a whole. Having said that, we are seeing, if you read the news about venture capital activity, you are seeing that there is a crisis going on. Right. This crisis is based on the fact that there's less money that has gone from limited partners into VCs. And part of that is linked to the returns that have been yielded historically, right, in this geography, which are unfortunately not very high. However, the real truth is that it's part of it is down to prejudice in the United States, right, where most of the LPs are coming from. And you know, it's very hard to convince an LP to actually put money in. So we've been doing a lot of work trying to talk to LPs in the US to put money in. And by the way, I don't need any of that. The big advantage of being on a corporate fund is actually I get the money from Intel, and that's that. But I cannot sustain an ecosystem alone. So we want to see that happen. As much as we can disclose things, we are disclosing in the US to the relevant parties. And in Europe, we are talking to you know, I gave up trying to talk to some certain LPs here because the ones which are open-minded, they're already investing. Others, like, I'm not going to name, but there's a very big one that the UK government every single time refers to them. And they simply don't put any money in Europe or the UK for that matter. I don't even know why they reference them as a key part of the ecosystem because they're not, right? But I am talking to governments. I just met last week on my vacation. Actually, I met the minister for the small enterprises and innovation, whatever. I don't actually know the title of that lady, but she's a very smart lady, and she's trying to actually herself make a difference. They are seeing what the French government can do in France and maybe also in the European arena. And I'm not proposing the governments put direct money because I think it's not ideal, but I'm trying to see what can they do to help the ecosystem. Especially in France, they had some measures that actually affected negatively, right, the ecosystem, right, in a negative way.
So talking about liquidity across Europe, you know, I keep hearing you can read 5 different reports and get 5 different answers.
That's right. Well, just to name a few, I actually buy, and I'll say the names, right? I bought reports from Thomson Reuters and Cambridge Associates. They are the most credible entities that would do IR tracking, if you will. And it's unbelievable, right? Because if you get the US, they're very consistent, very close one to another. If you get the European one, one is actually literally 2 times higher than the other for the same period, same methodology. So basically that means that you can't really trust the source, right? And one of them doesn't do Israel, but the other one does it. How come? And I look at that and I say, okay, there's a problem already there, right? If you don't have that level of transparency, how can you convince people to put money into this, right? So that's something that I think the European Venture Capital Association, and also the British, when I mention the British because they are the biggest in Europe, they should actually try to do something about it, actually, right? To not try to promote irrationally, but actually look at the facts and promote the facts, but also explain what's the negatives as well, right? Promote the positives and explain the negatives. And then I think people would be open, right? We're not doing this because we are suicidal. We have made money here, and I think there's a story to be told.
So looking into your crystal ball, 6 months, 12 months, are you bullish? Sorry. No, just your thoughts.
Again, in venture capital, that's a difficult question to ask because 6 to 12 months is nothing really, right? Am I looking to invest for the next 6 to 12 months? Yes, I am, right? Like I said, it's just about to close a deal now. We are working on a big spin-off in Israel, which is a wearables-related technology. We are doing, again, a big deal in the UK. I mentioned the UK wasn't as brilliant as people thought, but we are doing a big deal in the UK as well. So we are open for business. Israel has always been a hotbed of innovation. We've always been there. We've always invested quite strongly in that region. We'll continue to do so. The bigger question for me is, are we, if I may, right, do we see a closing of the gap in relation to getting that innovation, which Europe has always been a hotbed of, but getting that in the commercial mindset in a way that transpounds the boundaries of the national, if it's a French company, go beyond France and being successful beyond France. If it's in the UK, go beyond the UK as well. And more importantly, get US companies to be open to acquire them, right? And again, it's all in, working for a big US multinational, and I don't work on the acquisitions team. There is a big Chinese wall, really, but I do know them, and I do know how they behave, and you can see that if there's a level pegging company, one in the US and one in Europe, they will take the US company for sure, right? Even if they have to pay a little bit more even, because it is easier to work with people who are closer by. Fundamentally, that's the story, right? Are we seeing that get mitigated? We're seeing more US companies being open for business. Recently, we have seen a lot of activity here about big US players making acquisitions. Hopefully, that's going to continue. I'm bullish on that. I think it will continue, but it's a slow-paced movement. So it's not going to ever be the same as the US, but we're seeing more and more. The second part of the equation about being open for this geography, because as I said, the core asset is here, the innovation element, right? But the second part of the equation would be, are we seeing also on the exit front, IPOs being more open to in Europe and so on? The fact is, I'm very negative into that because I don't see the proper research, which basically affects the post-IPO trading, which then limits liquidity and limits the value you're going to get out of that asset. And if I were to take a company public in the UK, my preference strongly in Europe it would strongly be in the LSE. But frankly, I think if you want to go public, you better start looking about the US and make sure that you have a reason to be public over there, or forget it. Which that in itself puts you behind the US. And we have to consider that the GDP growth drives also the growth of the startups because they are present in those geographies. So it's a bigger challenge, basically, right? And finally, the fourth thing would be, are we seeing better management teams than what we saw and what we were seeing in 98, 99, 2000? Are we seeing better VCs which are more open-minded? And I think we are. I think we are seeing people, I remember doing deals in 2000 when basically whatever the CEO said, I remember we came in, we were a junior player into that particular company. I'm not going to say which company it was, except it was in France, which is a country that I basically said I was very bullish of in relation to. But basically, that VC basically behaved as if the CEO said something. It was like the king saying something. You cannot challenge. And guess what? The guy wasn't right. Eventually, we couldn't tackle him when we finally got rid of the person because we had to fire him. It was too late. We're not seeing that now. We're seeing the good VCs, and it's easy to identify who they are. They are understanding what you have to drive towards, right? And they are taking the right measures, right? And I think for the entrepreneurs in the room, don't just get fooled by, hey, I can write you a big check and pay maybe a little bit more valuation than the other guy. Look who they really are, right? Understand the size of their fund. Understand, do they have cash problems? Are they healthy as a fund? Understand who are the partners you're going to be working with. Can they add value to my company? And what add value means, I'm telling you what I think, but you have to come out and see, I need help with an expansion into the US or into Asia or into Latin America. It doesn't matter. You have to think, do I have the right person, right, as an investor? I need help because I need somebody who has experience in this segment, who's done it before. Do I have the right people, right? And fundamentally, that's that. And also, the final thing is behave as shareholders. Yeah, you're a founder, you're an entrepreneur, great. But you have to understand, this is about, once you get an international investor, you're not going to have your way anymore. It becomes a more professionally managed company, which obviously people are not necessarily sacking you, right? But you need to be able to work with others, right? And maybe there will come a day that is better for the company, and even for you as a shareholder to step down and get somebody else to run the company.
So last thing before we take a question or two from the audience, valuation and value creation, Europe versus, say, Silicon Valley.
Well, valuations in Silicon Valley are higher than here. And I think, by the way, that's not a positive, it's a very big negative, because if you think about it, what you want, even as an entrepreneur, is ensure that your VCs can make money, because if they don't, they're going to lose interest and they'll start behaving irrationally, right? So if you get a situation that is obvious that people overpay to get into the round, the more it goes towards, you're gonna have that reaction, and it's going to be bad for everybody, right? So I think valuations are creeping up in everywhere, but the US is still higher. Value creation, I think that's directly linked to innovation, and it really depends on the segment in the company. Innovation is not a monopoly of Silicon Valley. Fundamentally, that's that. As I mentioned, we are big investors in perceptual computing. We're probably the biggest investor in the world in perceptual computing, which is this next generation user interface between computing machine, with regards to phone, a tablet, a computer, a TV, and individual, right? So gesture, voice control, anything we think of, right? 97% of the investment dollars we put to play in that ecosystem were outside of the US, right? Just to name a few, right? Wearables. We made an investment in a wearable device company, which basically is really this. The wearables you're seeing today are not going to be the same wearables 2-3 years down the road. It's just an evolution, right? And even if you don't believe in the segment, the fact is big companies believe in the segment, so does, as an entrepreneur and as an investor, there's money to be made. So it is a hot segment, and we are going to play in it, right? We are playing in it. The companies we're looking at, frankly, are not in the US, right? Does that mean we're not going to look in this? Of course we are, but the ones right now which we're engaging, which we think there's something to them, are all outside the U.S. So, I think the key for us is we can afford to be big, right, which requires a big fund, and we play to that strength, which is we then look at best-in-class companies everywhere. And if that company comes from, Singapore, comes from Japan, comes from Israel, comes from South Africa, it doesn't matter. We will engage.
Yeah, I think I saw something that in Europe right now, there's more than 20 companies in the pipeline that are about to go with billion-dollar plus valuations and some sort of liquidity event, which is more than in quite a while. So, is Intel in on all of these, or do you have some regrets?
Let me just be a little bit of let me put the following thing. This number, I saw the number. We have to look at the source it came from, right? And I wouldn't necessarily trust that very much, right? Because it was an interested party.
I'll ask him tomorrow.
Yeah, but I have to say that we are in some very interesting companies here in Europe. And as I said before, we have made money in this geography. And when I say made money, it's not just putting a little bit. As I said, we put over, if I look at the last 15 years, we put $4.7 billion to play in Europe, and we have high double-digit returns. So we have made money in this geography, right? Sorry, by the way, I'm mixing. It's not only Europe, it's EMEA, but the biggest part is Israel and Western Europe. Are we seeing more and more healthy valuations and healthy companies coming to play? Yes, we are. But again, comparing to the United States, if you really look into what's happening in VC, and that is a problem, is most of the monies have now been shifted towards consumer internet-based companies or digital media type of companies, which is not, don't get me wrong, we invest in those segments. But when you have other companies which are more, let me put it this way, hardware-based or something like that, which is a part of this ecosystem, you have to invest in, and you start struggling to get people to invest in, it becomes a problem, right? So that's something we are seeing in the US, we are seeing in Europe. And I have to say that we obviously care about that as well, because we're not going to be the only guys flipping the bill, right? We have to see what is the risk profile to put money into certain companies. But even companies in those less sexy segments, we are seeing innovation coming out of Europe and in Israel, and we have made money on it, right? But just to name a few, I think the previous speaker mentioned something about big data as well, right? Obviously, he's talking to the classroom, which I wouldn't classify as big data, but we are in big investors there, and then you have really three things. You have the analytics, right, which depends on the vertical, and yeah, you have companies all over the place there. You really have to identify the right companies to invest in. You have basically the input capture field, which is not very interesting as an area for investment for us. And you have the big data storage. If you look at the area that we are seeing the biggest innovation come out of big data storage, is out of Israel. Very few people can do proper due diligence on that. It's a very fine line between a total flop and a company who will have, as a pre-revenue company, $300-400 million valuation, right, on an exit. And we have seen that happen, right? So we're engaging there and so on. And what we're seeing is the same 3 or 4 guys plus us trying to compete on those areas, because those are the only guys open to that, and they are making money. We are making money, right? Okay. So be open-minded on the investment side, right?
So anyone in the audience have a question? We'll start in the front. We've got time for 2.
Short and easy. Gil Agnew, New Energy. What's the average time that you're holding an investment in your experience at Intel, roughly?
I won't talk about the Intel one because it depends on region by region. Right? I can say what is my current average time now in Europe, and I have let me put it this way, I have a big portfolio. It's about a $4 billion portfolio value now. We mark to market that every 3 months, okay? But basically that our average is about 4 years, if you will, right? But historically, and that I will mention to Intel, we have sold companies in less than a year, right? One example is the Israeli company, Anobit, we invested. We sold to Apple. We put about 15. We made over 4x our money in 9 months, 10 months, right? And we have also sold another company that we stayed 22 years as an investor in. So, the point and we made 610 times our money in that company, by the way. We time the exits as much as we can, and we will do what we think is best in relation to profitability of that investment.
Based on profitability?
Yeah. We don't necessarily get it right all the time, right? I also would have I'll be the richest guy in the world, but yeah.
Hi, Boaz Kogan from the Catalan Institute of Nanotechnology. There's a perception generally that venture capitals are becoming more risk averse and that are moving away from investing in the very early stages of companies. Could you comment on that?
No. Let me just say the following. First of all, you have to look at region by region. Venture capital is a very regional industry, right? Yeah, we play all over, but we have regional teams, right? Yeah, we have an investment committee that is central investment committee that looks at everything, but we have regional. You have to be regionally. So, what I am seeing a trend is we're seeing less money flow into venture capital. Not only in Europe. Europe, I think, has been more drastic, but also in the US and everywhere else. Why is that? Because the type of risk you're taking has not yielded the returns expected, if you will. And that includes the United States. And if you go into earlier stage, by definition, right, there was a study, I think, published last year, the year before, from Harvard Business School that said that I think it was 9, don't quote me on that number, I believe it's for every 10 new companies that get created, 9.7 will fail. Right, fail means they will go bust. And the other 0.3, probably that means a 0.001 will make real money on it. So it's a very tricky proposition. The earlier you get, the more risky it is, which means it's harder for the funds, which then means that people, since there's drying out of money flowing to VC as a whole, that could be where you're seeing at. I've looked at numbers in Europe, though, and what I can say to you is there's more money flowing proportionally to seed stage and early stage funds than there has been to the early stage VC type of plays, if you were to doing A rounds, if you will, right? So I actually see the crash crunch happening more a little bit after the seed stage, if you will, right? Part of that is because in Europe you also get government money that has been put to play, you get a lot of grants and so on and so forth, right? But I think the risk aversion from VCs has been that they have shifted and everybody wants to find a new Facebook. We do too, right? But you have, when you shift totally the core function of a fund where you have partners with expertise in certain areas and you totally shift that to only invest in consumer internet related businesses, I think that's a problem.
Excellent. So Marcos will be with us for lunch and then he has to catch a flight. Yeah. So we'll have a table. You can join him, ask some questions. Thank you very much.
Thanks.
It's great to have you here.
Cheers.